A new month, new opportunities. And today we're going to talk about Bitcoin and its prospects in December. Note that last week Bitcoin was trading around $93,000. I mentioned that it could rise to 96 or even to the 100 to 102,000 range. But instead it dropped to around 84 where it was yesterday. And now it's trading at 90 where it is today. Is this an analytical error or just one possible scenario? Let's take a look at the chart. Notice that Bitcoin has tested the green moving average multiple times. This is the 50-week average, and accordingly, these are weekly candles. It touched it here, here, and here. But here, the week before last, it broke below it and continued moving down all the way to the 100-week average, which is shown in red. And the previous week, which closed with a green candle, reached a maximum of $93,000. But this week, we went back to the 100-week average again, and there's nothing unusual about that. This does not contradict the fact that technically a move for a retest of the broken 50-week average is expected. In other words, we broke through it from above, and now we need to test it, to check its strength. From below upwards, meaning we need to approach it from below and knock on it. And it is currently located around $102,000, maybe even a bit higher. This is the main reason why I said that growth towards the 102,000 area is likely. It's a very probable event. Now let's take a look at the 4-hour candles and then switch to the monthly ones. On the 4-hour candles, I showed you pictures like these. Notice that the 50 period was being tested. I said that after several tests, we might immediately break through the 100 period line and go straight to the 200 period one. That was when we were in this area right here. Here is the white one. We broke through the 50 period line, reached the 100 period, but didn't go to the 200 period. I said that we have two options. Either move towards the 200 period line or return back to the 50 period line. We went back, even significantly lower, but without updating the lows. And now we risk ending up above these moving averages again. If the current candle, let's turn on the countdown to the candle's close, there are 53 minutes left. If in the next 53 minutes the candle closes above the 50 and 100 period moving averages, that's a strong signal that the price could move towards the 200, which is around $96,500. In other words, the scenario we saw on the weekly candles pointing to growth towards $102,000 is coming back to life. Well, let's wait 53 minutes. Maybe by the time you watch this video, everything will have already closed and it will be clear what to do next. But let's switch to the monthly candles. Let's take a look. This monthly candle for November, which closed recently, engulfed 1, 2, 3 months of growth. Well, let's say the growth in June raises some questions because there was no new high, but the candle body closed higher. Nevertheless, this is a bearish engulfing pattern which suggests a continuation of the decline. There are no other ways to interpret this candlestick structure. This is further reinforced by the fact that for 1, 2, 3, 4 months, the price was in a sideways range. In 2 of those months, it updated its all-time high and closed with a red candle. And even then, it was clear that the priority was downward. I've mentioned this more than once. Now, after such an engulfing pattern, after breaking out of the sideways range with a big red candle down, well, on our screens it's orange, but still, it indicates that the downward movement will continue, at least until the previous low is updated. In other words, there's a very high probability that we'll update November's low in December. In November, the low was $80,600. Now let's mark the key levels. The first key level. The lowest close was in March. In the current year. That's $82,550. This is a key support level. Take note, we've already tested it. There's nothing stopping us from testing it again. What's important is whether we close below or above this level. If we close below, there's a high chance of moving to the next support. Where is it located? It's right here on the August 2024 candle. Take note as well, the 50-month moving average is also moving toward this point. Also note that right here, we already broke through the 50-month moving average. And here we tested it, and this suggests that a decline to the $58,974 level could also develop further, not just to the 50-month moving average, but here to this area of the small red average, which is actually the 100-month moving average. In other words, it only started being calculated recently. And that's already a level around $36,000. Well, below $40,000, let's say. So you need to take these risks into account, especially considering this bearish engulfing and the fact that there is absolutely no reasons for buying for long-term purchases from the perspective of the monthly time frame. Now let's switch to the daily candles and we'll wrap up the review here. And the next review we'll do will be on the S&P 500 index because the cryptocurrency market is a market of high-risk financial instruments. And if we suddenly see risks of a decline in the stock market, here they will only intensify by a factor of 2 or 3. What do we see on the daily time frame? First of all, we can see that the 200-day moving average was broken. Pay attention right here. The price moved away from it. God knows where. Very far away. The 300-day moving average was also broken. And so this kind of picture suggests that at the very least the price should return to the nearest moving average in the very near future. And right now the nearest moving average is the 50-day, which is around the $100,000 area. Also, note that yesterday's daily candle formed a bearish engulfing pattern. Today's candle could already form a reverse bullish engulfing pattern. And this is an extremely rare situation when one candle engulfs in one direction, the second re-engulfs it, and then the third, as a rule, doesn't engulf anything. It already acts according to the scenario set by the second candle. And in this case, if we see that today's candle engulfs yesterday's, it's very unlikely that the next day, tomorrow, we'll see the price move even lower. It's more likely that we'll see a continuation upward, and our task is to determine where to. We've identified this as the 50-day moving average, around the $100,000 area. As of now, this channel is about trading. We're looking at the cryptocurrency market, the stock market, the commodities market, gold, oil, and gas. I don't have time to cover everything, but step by step we are reviewing different instruments. Please subscribe, leave your comments, and also share your suggestions about which financial instruments you would like us to analyze together. Goodbye, see you next time.